Hey everybody. In this video I'm going to go over how to tell if a stock is overextended and how to know when to sell or whatnot. So basically every time frame has a different level of importance here. When you're in a day trade or a swing trade, let's say, and you only trade like let's say, the same day to like 1 or 2 day hold times, right? So you're only going to be looking at the 15 minute, the 5 minute, and the hourly. So each situation is different, and um, basically when something gets overextended, let's say on the 5 minute chart, if it's not overextended on the hourly and it's not overextended on the daily, a stock can just push higher and higher and higher, even though it's overextended on the 5 minute. Okay, so this is the QQQ, which is tech. And if you look here, it gets overextended, way overextended. It pulls back hard, but it continues higher. And here, it's way overextended the entire day, but it just rages higher and higher and higher, right? And the RSI actually comes down because the rate at which it's increasing decreases, right? So the velocity of its increase decreases. And when you're trading options, that's something you have to watch for, because if you're trading stocks, right, the velocity at which the stock increases or the speed at which it increases is not a big factor at all. All you want to do is have the price increase, right? So from here to here, right, you're going to make money on shares, but with options you might not, because the rate of change, right, when it's coming up this fast is actually so much higher than right here, right, where the RSI is lower, that the options value on short dated options are actually going to be worth um, less up here than over here. If you got in the money, deep in the money, it's going to be worth more up here. But if you're out of the money or just short dated at the money, whatever, it's going to be worth less up here. The types of options I trade. So yeah, with RSI though, as I was saying, so in this situation, the QQQ is actually way overextended on the hourly as well, right? This was 830 here, but it wasn't way overextended on the daily, right? Like way overextended for QQQ is like 75, 76. We've gotten as high as 81, but each stock, the RSI is relative. Okay, so what I recommend doing is looking at large time frames, for different. Like if you're looking at the hourly and you want to know if the RSI is too high, go to the 90-day hourly, right? And this goes back to June, right? So if you look at this, you say, oh wow, so the highest the RSI really gets is about 80. So if it's 80 or above the RSI, right, because that's really high for this stock, that's way overextended. So what I would do if I'm looking at the RSI and trying to figure out something from it is I'd say, oh well, the RSI is 80, or let's say the RSI is 86, right? So when was the last time it had this RSI? And the answer is it hasn't in this time frame. But if you say 83, for example, right, you can go back to like this day where it was 83 and say, oh, what did it do? Well, it went higher and it barely ever pulled back. It didn't care that the RSI was high. It didn't pull back, right? And so you can just go back and look and see and say, oh well, look, it's overextended here and it pulls back crazy the next day. So you can go back and you can look at different instances where the RSI was that high. That's what I like to do. So like if you look at QQQ and you go to the 15-day, 15-minute chart, you can see when it gets way overextended, it actually has continued up, right? Because it got way overextended here, continued up. Well, it pulled back here, but regardless, it didn't pull back that much. If you look here, it ripped higher, got way overextended, pulled back, and then ripped higher again. So, yeah, RSI it's relative, and it's not a super important indicator, but it's very powerful when you use it in conjunction with other things. Each trade is relative, and when you're looking at the RSI, it's always relative. So each situation is unique, right? So let's say I swung Alibaba right here, right? This is just an example. I bought calls here. So now the next day, right, it opens up and the first bar, it's way overextended, the 15-minute. So that means I'm going to be looking for an exit, right? I'm up 50%. Let's say I'm up 100% on these calls, right? They're weeklies. I'm going to be looking for the exit. I'm up 100%. Like, if this goes down to 70%, like, I'm out. So I'm looking for the exit at this point. And so if you look at the 5-minute chart, right, it's way overextended. Even here, it's way overextended. So, and it just broke out, but it broke out in high volume and all that. So I'm going to be looking for the exit, right? And basically, I'm going to watch very closely. And I want to sell usually by 10 or between 10 and 10:30 usually, because that's when a stock will change direction. You know, usually most of the time, stocks will change direction around 10 or 10:30, right? Or they'll get flat from 10:30 to 2:30 or so. There's not as much action. So basically, when the RSI gets really high and I'm already up a lot of money, I'm looking for the exit. You know, whether it's the hourly or the 15-minute or whatever, right? So I was in Amazon puts the other day, and when was I in them? Yeah, I was in it. I was in the puts up here, and it tanked, but I thought it was going to tank quite a lot more down to 14.30 the next day. So I held through that huge drop. So the next day it came up and then it came down, and I actually sold right here, and I sold like right here, and the option value here was just about the same as it was at the end of the day. But if you look here, when it got all the way down here, the RSI was way overextended to the downside. So when you're way far from the 9 EMA and you're way overextended on the RSI, you can just expect that there's going to be a mean reversion pretty soon, or when it happens, it's going to be pretty violent, right? So like down here, it was 34.58, and the 9 EMA was 34.73. It was $15 higher, almost 0.5%, which was huge because I was in short dated out the money options. So when it got that extended, I was like, yeah, this is a great spot to take profits. Like, it wasn't overextended to the downside on the hourly, right? Because it was already so high, so it's going to take a while to get overextended to the downside on the hourly. But if you look at the 15-minute, it was getting there on the overextension. It was getting pretty extended to the downside. And if you look at the 5-minute, it was overextended on the downside when I got out. So RSI is just an indicator that you got to use with in conjunction with other things, and you want to see that when an RSI is high, it doesn't mean that you need to sell necessarily, but it does mean that you need to be on the lookout for the exit, right? You got to be ready to exit because you know it can pull back pretty hard. Like as you can see, look, AMD here got way overextended right at open, and look how much it ripped. You know, it didn't even care. Some stocks tend to do well when the RSI is overextended, and some stocks do poorly when the RSI is overextended. If you look at a stock like Airbnb, lately it's been failing all the time. So, you know, I bet every time it goes overextended on the 5-minute, right, it pulls back because it's been weak. Right here, wherever it gets overextended on the 5-minute, it pulls back because it's just been weak. It's been getting rejected, right? That's why it's got the big upper candle. So every time it gets overextended, it fails. But like a stock like Nvidia, you know, it tends to keep moving when it's overextended. Right? Look, it's overextended here, but look, it keeps ripping higher. It still rips from 208 all the way to 224, even though it's extended. So some stocks like to move when they're overextended and just continue moving. But the thing to watch for with overextensions is some stocks tend to pull back very violently when they're, you know, highly overextended. Like, this is 2020, so that's a you know, a rare situation. But if you look here, right, it's way overextended, tanks. Here, it's way overextended, it tanks. Here, it's way overextended, and then it eventually tanks. But it took a while to tank, you know, and it would have been hard to try to time that. But there were cues, and there were clues as well, cues and clues of the pullback happening here. But yeah, so RSI is isn't something to be used alone, and it's not something to you know, be totally obsessed with, but it's very important to watch without a doubt. And like one thing I like to watch for the RSI is it's not as important when you're in a position as when you're getting into it, right? So like you don't want to get into something that's like, you know, at 80 RSI or something. Each stock's relative. Some stocks, you know, 80s high, and some stocks 70s high, and some stocks, well, yeah, I think 70s the line. So yeah, some stocks 70s high and some stocks 80s high, right? Like some stocks have a little bit more leeway. Like a stock like AMD, you know, the RSI gets up to 86 sometimes and stuff, but some stocks never get that high. Alibaba's been getting up to the 90s for the RSI. But yeah, so to use the RSI, it's like when the RSI is getting way overextended, and you're up profit and stuff, that's like you need to be ready to take profits. I wanted to go over, I think it was Alibaba, and just show that like when this thing is ripping, if you're right in front of the computer, you can watch and you can see that each bar is barely breaking the low of the last, and that's what you want to watch for. And you want to watch that each one has strong price action, right? And as long as it's holding that 9 EMA, you can hold. If you think it's got more juice, right? So this bar barely even breaks below like the top quadrant of this last bar. This bar, you know, it pulls back a bit, but you know, as long as it's holding above this 5-minute bar here, you know, it's still pretty strong. And then here you see it close at the top of it, and it heads higher. And then here you get the bearish reversal candle on the 5-minute, which would obviously be a great, you know, place to exit. But yeah, so if you're swinging something, you can just watch this 9 EMA. You can watch the price action. I mean, you can wait till the 9 EMA breaks. But yeah, the RSI is if it's really high and a stock's about to break out, right? So if let's say, so I mean here it broke out and the RSI was pretty high. So like, let's see, I'd look at the 15-minute and say, oh, how high is the RSI here? And I'd say, oh wow, it's really high there too. What's the hourly RSI? Oh wow, it's really high there too. So I might not even take that trade, honestly. But you look at the daily, right? And you look how low it is, and you can say, oh, well, it makes sense for the RSI to be highly overextended to the upside on the shorter time frames, because the stock is highly overextended to the downside on the longer time frame, right? So each situation is unique, and you have to take that into account. And it's just really, RSI, it's really difficult to say, you know, there are like these cemented facts and laws about them. But like, I mean, basically it's like if you're day trading and it's over 80 on the 15-minute, you know, you should be looking for the exit, you know, basically, unless you're going to swing it and like hold it overnight. But if you want to exit that day, you know, an RSI over 80 on the 15-minute is a pretty good indication that, you know, it might be the highest it's going to be all day. But, you know, sometimes you have these weird days, right, where it's like this with Apple, where it just ripped and it went to 95 RSI and it just ripped all day. And it had huge volume as well. But like this type of stuff, like I'm not going to trade that. Like people are like, "Oh wow, like look what Apple did. Oh my god." But it's like unless you're in that in the first, you know, 5 minutes or so of that day, you know, and you're just holding for profits, like that's really hard to trade. Like I'm not entering up here when the RSI is 90 on the 15-minute. Like that's just not a good entry. That's not something I want to do. If a stock has earnings and they're unbelievable and the RSI opens at 90 on the 15-minute, you know, it can keep ripping all freaking day. It makes sense. But when there's like no substantial news and the stock's ripping like with 90 RSI in the 15-minute, like I'm not getting in that, because when it does pull back, it's going to be substantial. I mean, because look at this situation here, right? It rips to 90 RSI here and it tanks right back down. And that could have just as easily happened this day. But yeah, so RSI is just relative. Compare how the stocks reacted with the similar RSI in the same time frame. Each time frame is unique, and each stock is unique. So for my closing remarks, I'd have to say that how to determine if a stock is overextended is just look at the past and compare it to the present RSI, because each stock is unique, and 70 RSI on Apple might be more significant than a 70 RSI on Fubu or Amazon or whatever. So each stock is unique, and each stock needs to be interpreted individually.